Thank you and good afternoon. Okay, so this is a test for all of you. I am told that this is a session that's the most important part because by the time you go out of this place, we'll get to know two things. One is should our company be growing? Is there enough growth potential? And two, should we make profits at all? Right? So these are the two questions that we'll get some answers to. But more importantly, this is a special session for all of us here. So I normally call this the graveyard session because this is when we are tested. How many of you have eaten your food and come in? Raise your hands, please. Some can't even raise their hands because too much of food in the stomach. But however, we'll try and make this interesting. The topic is interesting, at least for me. And so the people that we have on the panel, I think if there is enough experience sitting there, and if they can't answer, I think none of us can answer. For most of us who from finance background for a long time, there is always this question, profit banao ki business badao. I know that's not necessarily a problem for a very small company. That's something that keeps happening for all kinds of companies. Very large companies, small companies and stuff like that. And in the last few years, we are witnessing new styles, new innovations around this. So the topic is interesting, and I do hope that our elite panelists will be able to answer some of the questions that come up. The idea is that as a country in India, and why this topic was chosen, and I don't know why Gautam thought that I should do this moderation, but I definitely know one thing. All of us in this place do believe that India has got potential which is for us to tap. Yes or no? Yeah. So there is growth available in this country, even as the rest of the world is talking about possibility of high inflation, some amount of worry towards recession, not necessarily recession, but some worry that there could be a recession type of ambience happening in some parts of the world. India is still telling I'm going to grow full on. They are also talking about being the fastest growing economy in the world. And if our Prime Minister has it the way in which he talks about, I think he is going to create enough momentum in the country to make things happen. Why? Because all of us together are contributing towards this 1,80,000 crores and more of GST every month, right, as a country. Now that amount of crores of GST would necessarily mean that there is something happening in terms of business in this country. Also the country is getting connected really nicely. So even if a person is in the rural part of India, they are able to connect and get to know what's happening all around. Consumption capabilities therefore are aspirational, and there is a whole lot of people who want to be served who may not necessarily be fully served as yet. So these are things that we all believe will happen. I am also told that the country is now past the $2,000 per capita income. Again, a good thought process. For all of us to kind of think that not just that they want roti kapda makan, but they'll also start choosing the kind of roti or the kind of kapda and the kind of makan that they want to live in. Right? When choice comes in is when retail flourishes. So with all this in mind, the question at the top of everybody's mind is obviously, do I have the ability to try and grasp this possibility in this country? And if yes, what could be sustainable growth? And then what is profitability therefore going to be in terms of a target? So this is my opening thoughts. I would urge our panelists to also give their thoughts on the topic slightly for one minute, whatever is top of your mind. And then we'll go on to the question answer session. And just to know that some of you are awake, we would hope that the last 10 minutes we'll leave as open session for people from the audience to be able to ask questions. Would you need it? The last 10 minutes to ask questions from your side? Yes, there is somebody who wants to ask a question now itself. Good. The others can also get prepared as you keep listening to the answers. Is that fine? Thank you so much. I'm just involving the people here. I don't want anybody to feel kana khaya, abhi sone ka time aaya. So Karna, we start with you, Karna. First, your thoughts on the topic and what you think is top of your mind.
It's a very, very valid topic, Kumar, because the last 3 or 4 years we've been seeing growth, particularly the post-COVID, and with all the new the businesses, the new age businesses that have come in, growth at all cost. And okay, can you hear me?
Yes.
Sorry, the growth at all cost and profit is not, but the things are changing right now. we need growth as well as the profit. So I think you have mentioned in the what do you call, in the topic itself, sustainable growth. I think that's extremely critical. And sustainable growth doesn't only mean profitable growth. It includes, it's a wholesome, it's sort of an inclusive growth. I mean, how can we probably include something like an ESG and ensure that we score on all the levels. So if you ask me, yeah, growth is critical. Profitable growth is all the more critical, and all-inclusive growth is very, very critical for the company to succeed.
Thank you. Now we'll have thought from a jeweler's perspective, because I think jewelers have also had a set of ups and downs thanks to COVID and various things that's happened. So Kiran, from your point of view, what's really driving the businesses? Because you also told me that you've been growing quite a bit. So, and then for a long time you were not really growing. I mean, you're there, you were sustainable, but it was not big growth. So maybe you will have to give us.
So the growth is...
and a little bit of the history, because I loved what you talked about, when you got established and how you were for the first few years, and then how you started growing.
Yeah, the jewelry industry in India has evolved over a period of time. And now when we look at it, it's become much more aspirational rather than being investment driven. When it becomes aspirational, consolidation starts. And when the consolidation starts in the industry, that is where the organized players in the industry start getting the benefit of that. And that is what is happening. One is the economy is growing, obviously, and then there is a disposable income available for the people to spend and all of those things. In addition to that, especially in this industry, whereas 80-85% of business was in unorganized, which was not very regulated and all of those things, but with a lot of measures from the government side, a lot of things, the businesses started consolidating, and that is also benefiting or helping us get that additional market share. And there is a double impact onto the whole thing, that one, the economy is growing as such, and on the other side, we're getting a lot of benefit on with GST coming in, with all the regulatory requirements like PAN card, like all of these things coming in is actually giving us that boost, because the smaller unorganized sector is not able to keep up with the compliances that are required there. They're not able to keep up with the kind of pressure that is there in terms of being compliant, in terms of spending that additional cost on making sure all those compliances are there. Is not possible for them. And that is how it is doing that. And the consumer behavior is also changing. If we see that the jewelry is becoming much and more aspirational, it's becoming much and more fashion driven, rather than being investment driven, or rather than making it like an insurance product for them and all. But it is becoming much more, it's getting much more exposure like any other fashion retail. So that's something that is driving the growth.
Thanks, Kiran. I think I'm going to come back to you on a small point that you talked about. It's about the smaller player. What do they need to do? I'm going to find some answers from you on that, because there are also small retailers around. And so what should they do to really try and grasp the growth is a question that's there, which I'll come to later on. But I'm kind of getting you prepared mentally to answer that question as we go ahead. So, so we have, from the point of view of Karuna, yeah, I mean, their growth, they're seeing what's happening. Profitability is, of course, important. So I think he's at a phase wherein he's thinking he can grow as well as profitability is possible. From a bestseller's perspective, what do you think an international company comes in with, and how do they look at this market, and what is their thoughts on growth and profitability?
Thank you for having us here. Now coming back to what you have asked. Growth has a very different meaning for different people and, of course, the corporate entities. And the common meaning would be about sustainable growth. If we need to grow, whether it is in sync with the stability and does it make economic value or not. That's a common thing. Now, from a bestseller perspective, if I look at it, we have just completed 15 years now. So it has been a very good experience in India. We started when foreign brands started to come in, especially in the apparel sector. because the economy had opened up. People were more educated towards what was happening in the world all around. So our entry was, I will say, at the right time, and we have progressed quite well. And we look at India with the changing global scenario, where China has its own set of issues, and then against you have Europe, US, UK, and other countries. India has a lot of potential now. My understanding is we don't need to compete with China. We have very different culture and ethos, right? So we don't need to compete. It's time for us to grow. And from our perspective, we see India as a huge market now. The only difference is when we entered, our focus was more on tier 1, tier 2 cities. Now what we realize is, because of, it can be termed as unfortunate that COVID came in, but somewhere it has given us a lot of good insights. What can be done with the limited resources? So, for example, for travel, you needed, plane, train, and you wanted to have a face-to-face kind of meetings. Now, post-COVID, people have been asking if there is a regular interaction, why can't it be done on, phone? You have got mobile facility, you have got interactions that can be done. So now, when we look at tier 3, tier 4 towns, people are very intelligent. They have started to realize that they have more potential sitting in tier 3, tier 4. And all the development is happening in those areas now. You can see a lot of malls coming into the area. If I sync it up with the business, a lot of malls coming in, a lot of educational institutions are coming in tier 3 and tier 4. And to clothe them, probably Bestseller, has a good opportunity. And we are expanding fast. The only thing is, the channel may be different. We may want to bank on the partner strengths where they are already present. So all in all, I see huge potential in India for next 10 years. That's for sure.
Interesting. I think you also touched upon two topics that we have to talk about later. One is from the point of view of cost and innovation around controlling costs. I think you touched it very briefly. And the other thing is you talked about how to really achieve potential from smaller cities in the country. I think that's another big learning for us, Pratap. So now we go on to Rahul. Rahul, your experience and yours is like a dream run for most of us sitting in retail, right? It's one of those brands that's ever expanding. Every month I get at least 2 emailers telling about stores expansion. And I think quite a few people here in this place also must be getting some email or the other about new towns and new places that you're opening in. So yours is very clearly utilizing the potential for India. So growth is there. What do you think urges you all to really grow on the one hand? And what do you think one needs to consider for growth in this country if one has to look at brands in India?
Thank you. Good afternoon, everyone. So I feel actually very proud that the company I am associated with has demonstrated its commitment towards ensuring consistent and sustainable growth, not only in revenue, but margins as well as profitability. I mean, I feel proud, and I think all of us would appreciate that. Every investor also appreciate that. And the reason behind is that the approach is very clear, that we want to grow in an organized manner. Only growth in volume or increase in business is not important. It is also very important to grow along with healthy margins and returns. That has been the key fundamental of the company, which has led to success. I mean, it is very clear, when we go into different conferences, we attend different conferences, we talk to a lot of investors. One common question is, look, you have industry-leading gross margins, you have industry-leading returns, you are growing in this manner, why don't you grow more rapidly? The idea is that we have the same answer, that we want to grow in a proper manner, in an organized manner, in a sustainable manner, so that we not only grow in revenue, in volumes, along with a healthy margin and profitability as well, so that there is a long-term creation for all the stakeholders. It is not only important that company earns, it is also important all the stakeholders which are associated with the company our franchisee, our vendors, our stakeholders, our investors, all should grow along with the company. So that is the basic fundamental of the company, which I also feel that all of us should think around while we strategize our business, because that is one of the very key factors that, nowadays we think about growing our business in terms of volume and revenue. That is only one part of it. But growth is only not about volume and revenue, it is also about growth in the profitability, in the margins, in the cash flows. And that is what creates value for the entire industry, all the stakeholders, I would say.
Interesting. I know you made it sound very simple. I don't know how simple it is, but I like the ethos that's coming out of it. The ethos is very simple, is that I need to grow, I need to achieve potential, I also need to be profitable, and if it doesn't look like I can get growth with profitability, I'm not wanting to go there in a hurry. I think many of the promoters and many of the companies normally land up into that situation. And finance heads don't know how to really solve this problem, because they've been told by their investors, grow, 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 and then they believe there is potential. Like we all said, there is so much potential in this market. But if it's not profitable, is it worth it? Okay. So I'm sure that we're going to get a view from Rajesh. Rajesh, your company has been growing left, right, and center. You're getting all kinds of brands. You're trying to grow across segments. One of those companies that's not shying away from touching every segment in the market. I mean, as a company, right? So what is the ethos that's happening here, and what do you think is happening as a group on the one hand, and what should people do?
So actually, one thing is, I'm in a situation exactly opposite of what he gets it. So most of the investors ask us, why don't you focus on profit? 10 years back, we are 1,000 crores and not company. Now we are looking at 15,000 crore organization in a 10, 12 years time. I think the larger thing is, what is the opportunity in the market? And investors will understand over a period of time. You also want investors who want to take a long-term bet on you, and you explain to the stakeholder, you align them over a period of time what to expect from us as an organization. I think we believe there's a huge opportunity in the market, and probably, I think we've been analyzing, we are the only company in the entire world which operates from value segment to the luxury. And we couldn't find any other organization in the entire world to do that. Probably there's a reason nobody's doing it. Maybe we were the first success or not. But we believe there is opportunity. Indian consumption story is growing big. Per capita, we're saying $2,000, but the relevant consuming class per capita is $2,700. And if it crosses $5,000, we expect luxury to explode. Unlike gold, which is seen as an investment and fashion, but ours is a purely fashion, and discretionary spends goes up, I think we want to take a larger share of that. In a country of 140 crore people, I think 15,000 crores turnover is actually nothing. Okay, the opportunity is much big. Actually, the tier 2, tier 3, and tier 4, actually we opened one of our brand store. We sell about 30 lakhs rupees in a store, which is 1,500 square feet in a tier 4 market. So there is a huge opportunity, and we believe this is the time, and we don't want to lose that time. I think our ethos is largely to be present where our customers want to consume us. Okay, so part of that growth journey of this country, where when it crosses typically 2,200, 2,500 per capita, is normally discretionary spends goes up, and we want to be part of that, the largest share of that piece. So that's the larger driving force. Having said that, I think, like you said, sustainable growth, I think we have to grow in a responsible manner. In both, like Karuna said, it's not just financially responsible, also responsible in terms of environment, social, and all the governance. I think two sides of growth will happen for us. One, India is only 30% formalized when it comes to apparel fashion. It's 100 billion market, and 30 billion is what organized players are attacking. And as the formalization goes up, probably that share of 30% will go up much higher. So we expect the growth come from there, larger part of the growth comes from there. Other than that, normally the whole market going up and also formalization increasing, I think that is the two engines of growth where we want to take a larger part. And we believe that the next 2-3 years is the time. And if we miss it, probably we may not get it again in this country.
Very interesting. If you really listen to each one of them, and if you've really taken notes, I don't know where you are going to head, right? And I'll tell you why. There is one company that says, I will grow, I know there is growth available, I'm going to grow based upon wherever it's profitable, and I will grow at my own pace. But I'll make sure that I'm going to grow in every place where there is profitable growth. There's another company that says there is profit available everywhere, but first I want to make sure that I'm there. I want to not lose out on the chance in the next 2 or 3 years, right? Because it's a very different ethos, but it still works. And there is no right and wrong for this, but each one of them can coexist and do better. And then there is one company that says, listen, I'm doing what I can in already the big matured markets, but I'm also doing things in the not so matured markets because I know there is growth available, right? And then there is another company that says, listen, there are people who are possibly not growing fast enough because they are not organized enough. I am growing because I'm organized. And I'm growing because there is potential available. I'm getting support because I'm organized. I'm getting support from the government as well as from the public because I'm organized. I think this is where life becomes very interesting for all of us. Karuna, you heard what each one of them are saying. And you also talked about how it's essential to grow. And the people who talked about economies of scale always tell, "Pehla scale achieve karo, apne aap mein paisa aayega." Is that true? And as a company, as a person, forget Shopper Stop as a company. If you have to look at purely as a person who's going to advise any company sitting here, what would you say for them who saying, let's achieve our growth, paisa apne aap aayega, profit apne aap aayega?
There is no, one straightforward answer for this, Kumar. I mean, you already said that, right? Rajesh spoke in detail about there is a market that exists. We recently went into the value fashion. We did a lot of research. The total market size is, as you rightly said, the total market size only for the value fashion is around about 130,000 crores. And the organized retail is just 28 to 29%. There is a huge amount of unorganized players. Like he spoke at length, right? I mean, how the unorganized market is getting into the retail market. What also happened is, I'm talking this particular thing, where there's another large company, Future Group, they had a brand called FB, and that exited. I mean, that gave another space of around about 8,000 crores. So coming to your question, there is no right answer, like whether I want to achieve the scale. Depends on a number of factors, like am I the first mover in the market? Then I would definitely like to achieve the scale. What is the competitive advantage I have versus others? That's another factor. To what extent I can scale up? I mean, can I determine what will be the market? Is the market say 1 billion or 10 billion? What is it I can do? What will be the competition that will be coming up in the future? So there are a number of factors. There is not one single factor that's going to determine whether I should achieve the growth at any scale or I should make a profitable growth. It depends on company to company. It depends on the appetite, what the person has. It depends on what are the stakeholders' expectations from you. It depends on the directive from the board, directive from the promoter. So there are a number of things. Like I have worked in a super conservative company, and I have worked in a company where the promoter say, no, you go and expand 30 stores or 40 stores, don't worry about the money part, we will give the money part. So depends on company to company. So there is no right or wrong answer. Like both Rajesh and my friend from Vedant Fashions,
Rahul.
they had Rahul. I mean, they have completely, contrasting views, but they both have been growing. And I largely echo Rajesh's views because, not because he's my friend, but even otherwise, the market is a huge market. I mean, so it's better, particularly if you're an apparel, I would say build the scale and the profit should come definitely over a period of time.
Quite interesting because from what you're saying, there are lots of factors. You're also saying that one needs to look at what growth stage are you in and what is the market growth rate. I think one thing that many people don't really look at is where is the market going to go and am I a first mover or no? And I thought that was a very nice answer because many a times, even if you're a first mover and if you don't move fast enough, you may land yourself in trouble. The guys who are going to come in as second and third mover would possibly be much larger and much better than you. So I think that's a bit of a thing to really mark here, earmark and then take it forward. With that in mind, with Kiran, US is a very typical market. US is a market where most of the players are still family-run small businesses. And you touched upon it slightly. I did tell you I'll come back to you with that question. One, what is your advice to those who are small, family-run 1 or 2 stores? Because each one of you have been like that initially, and then you became large businesses. And second part of it is, if a small retailer or a person with 2 or 3 stores wants to grow, what are the things that they should really take care of? Because it's very easy to kind of keep growing from 2 stores to 10 stores and then find themselves into trouble.
See, there are 3 things that we, especially from my perspective, that I'm very clear about at my organization. Number 1, the cash flows.
Okay.
The management of cash flow is the most important thing among everything else. If your cash flows are not managed well, the rest of the things are not.
And when you talk about cash flows, it's not necessarily internally generated cash flows.
No, it's a.
It can be any cash flow.
You know, this is a very high capital intensive industry that we function in, and it's very important. The treasury management and the cash flow management is the most critical thing that we deal about. And like Rahul was saying, though ours is much more capital intensive, but still the cash flow management is the most important thing that I advise, even if it is a smaller or bigger thing, that is most important. The point number 1. Point number 2, profitability. The profitability, if that is not there in the business, it can't sustain longer. That needs to be understood, that needs to be evaluated, and that parameter has to be in place. And third thing is scale. If you don't think scale, if you don't work on it, if you don't bring scalability in your business, how much of a big profitable your business is, how much of a better cash flows you're managing, if the scale is not thought into that, then it is bound to get acquired by somebody, or that's where it will land. But these 3 things principally are very important, and that's what I would advise also a smaller jeweler also, to look at these 3 things and ensure those things. And compliance is obviously that is there, but these 3 things for a business to grow, to sustain, is very critical and important.
Interesting. I'm going to ask an out-of-syllabus question to all of us. Okay. Because he touched upon something that's always plaguing our minds in some form or the other. Anybody who has gone through finance will go through this. Because when the e-commerce companies came in, they proved all our understanding of finance wrong, right? I mean, they came in and they said, listen, forget the damn cash flows. Cash flows are there, but investor ke paas hai paisa. Don't worry about money coming from internal accruals, right? All of us, many of us thought that internal accruals is the way to expand business. But those guys said that's not. Maybe they also thought cash flows, but they knew that there is cash coming from elsewhere also, not necessarily only from the business. And some of them have done well, some of them have not done well. But because it's kind of going through a baton, I'll put the question first to Pratap, and then we'll see whether others would also want to answer. You want to answer that?
I'll cite one example
Okay,
to that.
yeah.
Okay, so there was Carrot Lane. Carrot Lane is
Yes.
acquired by Tanishq.
I hope you're going to tell things
we
that's...
were talking to...
Yeah, I hope you're going to tell things that's okay to be told here, huh?
Yeah, absolutely. Yeah, so
Okay.
we were talking to him, and he made an exit. Mithun made an
Yes.
exit at a 17,000 crore valuation, which is the second highest valued after Flipkart. So when I asked him what could have been done better, he told me only one thing. If we had managed our cash flows well, he's a funded startup and all. If we had managed our cash flow very well, we would have done this 5-8 years early than what we have achieved today.
Wow, that's a new one. That's really a new one. Okay. Would you like to elaborate what that meant?
See, the cash flow management in a jewelry business or maybe any capital intensive business is very important, critical.
Yes.
The way you fund your business, the way your cycles are, if there is a disruption that cycle, the whole business operation will get disrupted. That is very important. The way you forecast, the way you put your cash flows in place, the way you implement your strategies, only because management thinks, the board thinks or the management thinks you want to expand, you want to go out there and do all that. For them, it is a different thing. They are cash rich. So that is there. But if you go out and do the things and don't look at your cash flows, there is bound to be a problem. There is bound to be a roadblock to the whole thing.
Fair enough. Pratap, what's your thought?
Cash flow, a tricky subject. I'll say it does not matter which industry we are referring to, which company we are referring to. Uh, the money has to go someplace. Either it is invested in capex or opex. And at the end of the day, like for example, for us, the main cash outflow is buying merchandise, which we need to resell, right? So there is a gestation period of the money coming back to us, and there is a minimums that we need to produce and put to the market. It never happens that you produce 100 and you have been able to sell 100. So you need cash flow, and there is a gestation period, you need to bear with that. Probably in jewelry, the shelf life of the jewelry is like infinite. So you do not lose money on that. But for us, merchandise beyond a particular season, it hurts us. The value of that particular merchandise after one season starts to go down. So it's pertinent that how much and where you invest money is critical. And when we say e-com, I'll use the word e-com, and I will not name the companies, but there have been several instances where one company got acquired by another company, especially in e-com, and then those companies changed hands, means you start to get new investors on board. And because India was comparatively very new to e-com business, so people were experimenting. And from a global perspective, there was a very rosy picture. People were keen to invest in India, and they kept on investing one after the other. And there is always a, number of instances that limits your industry. So take an example, Flipkart Myntra Group. That instance is over now. Walmart is there into the picture. They are not into the valuation game. They are into serious business, right? So they will keep on funding till the time the business is set right. Now, when we look at the profitability part, like Kumar rightly said, you have to be present. And then you can talk about other things. Rajesh said, okay, there's a longer gestation period for the money to come in. So it depends on the company, vision, mission, as how they want to operate. Typically, a small startup, the cash flow needs would be very high, and I believe dependency on funding would not be the right way to go in. So most of the time you see the owner promoters start to, liquidate their equity, because at the end of the day, if I borrow money from bank or any financial institution, there is a repayment, sword hanging on my head. Sometime I need to make the payment back, right? Then from my P&L perspective, if I look at margins and all, I need to incorporate that interest also as a cost, which probably as a startup or a small company, I may not be able to afford. So usually in that scenario, I would prefer to go into an equity mode, divest some part, make my cash flow robust, yet at the same time, try and make the business profitable. Because whatever you optimize can be plowed back to the business. So that's my understanding. So depending on the size, you need to take a call. But cash flow commitments are almost similar. It depends on the scale.
I actually am going to jump this question on to Rajesh first. So Rajesh, for many of us, we believe you are from Birlas. You've got enough money. Your pockets are very deep, right? So for you, cash flow, whether from internal accrual or from outside, is not the big problem. That's our perception. I don't want to break the perception currently. Having said that, there was one point that came up, I think you touched upon it briefly, about telling that I wish I had handled my cash flow better. Okay. Does that kind of a concept come into the group at all?
See, cash doesn't come free, okay? So every investor has an expectation on what the money they put into the business. So the only point is how much is for present, how much is for the future. See, at the end of the day, we have a business and some of them generate cash, some of them consume cash. So when you generate cash, how much of it you want to return to the shareholder, how much you want to pull back and then build the other businesses. We manage cash flow well. See, that's how you could grow and where we are. But I don't think whatever the name you are saying, it has come because we manage cash flow for last 30, 40 years well. Okay. In fact, in our system, more than P&L balance sheet is always cash flow first. So this is a conscious choice. Like there is something called Rule 40 in Wall Street parlance where the SaaS, software service companies are valued. The growth, revenue growth and your profit should add up to 40. So if you're growing as a company for 35% growth year on year and your profit is 5%, so as long as 40 you're doing well. Or it may be 25% profit company with a 15% growth. So it's for us is always that the profit is something you have to earn anyway. You can't survive as a company. It can't be only future. It's not a startup. The startup has to have, see, smaller companies are startups. It has to have that velocity. It's like a rocket leaving Earth. It has to cross atmosphere at certain speed and then get out. Otherwise, you'll get burnt and tank in the sea. So startups has that challenge. They need to quickly scale. They have to become relevant. You can't be 10 crores, 15 crores startup for long. You will just get buried. So naturally, that tendency to, as long as the money is available, the tendency to build a larger, faster business is almost like a survival. You don't survive if you don't grow. But for us, organization, matured organization like us, is that it's always a choice how much you want to invest and how much you want to retain. I think in our system also, we are a profitable organization, and then we believe that the entire profit should be flowed back into the business and built into a larger business. We don't give dividend, that's the reason. Probably we could have taken a chance saying, okay, I'll give dividend and then I'll invest less. But we see a large market opportunity, so naturally we took a call to plow back the profits. So largely ours is profit or you raise equity, that's the way we do it. But we manage cash flow well, it's not that we throw money into the business. So.
Yeah, I think I expected you to say this, and that's why it was specific to you. Because many people do believe that if you've got very deep pockets, it's okay to think that you can bring as much money as you want, so it's fine. But the fact is there is cost of money. And if money has to be given to you in the group, as compared to maybe some other businesses, there is always an ROI expectation. So I'm sure that your promoters look at you and say, listen, you want another few thousand crores, you have to tell me why I should put that money to you and not to some other business that's going a better Rule 40. I like this Rule 40 though. Huh? Rule 40, is it? Is it called? So is there an equivalent for retail business also? Maybe we'll take that from here.
As such, it's not there. Even so I tried with ChatGPT, it didn't work. So, software service, actually that's established that.
Yeah, so I was thinking maybe we get a Rule 30. That's more possible for retail. 25% growth, 5% profit ho sakta hai. We know that we can't do 10 to 15% profit unless you are exceptional, you've got only your own brands. I'm coming to that. Exceptional, only your own brands. But otherwise that 15% profit is not very easy in retail. So maybe we'll have to create a new, as a group, we'll have to create a new rule. But I like this Rule 40. And I also like the fact that you're talking about commitment to finance, about being conscious of costs, not just throwing it out. I like the way in which he said is that maybe I could have grown faster if I was more conscious of the cash flow situations. I think it's a very important term. Even the most successful, sometimes in hindsight, would think like this. So it's essential to take that up in that form. I'll come to you, Rahul. The question that I have in mind is, you know you've got a niche in the market. You know you're growing well. You've got a first mover advantage of sorts. I think Karuna talked about it. And as soon as he said that, I thought you got the first mover advantage. I don't know whether you believe you got the first mover advantage.
No, that's right. In the organized segment, you're right.
You do, right?
Yes.
So you got the first mover advantage. You've got the growth potential. So what would stop you from thinking, okay, I want to do 5,000 stores in the next 2 years?
So, yeah, you're right. I mean, that is what I was trying to say, that really nothing stops us. The structure is there. The scalability in the business is there. The market is there. If we talk about Indian wedding and celebration wear, it is a 1 lakh crore market overall, men's and women's, out of which around men's in itself is a big market, 15,000 to 20,000 crore market. and remaining women's is also a 75,000 crore market. So it's a very huge market where multiple players can exist, coexist, and grow at an exponential level. But as I mentioned earlier, that we want to grow in an organized manner. We have a 100% franchisee model. So all the stores are franchisee driven. Now we want to make sure that every franchisee should make money along with us. It is not only because it is our responsibility also that wherever we open stores, we ensure that there's a proper market there, there's a proper potential to grow in that market and make money, not only for the company, but also for the franchisee. I mean, that is where we are more thoughtful on around expansion of area as well, because we are of a franchisee model. I mean, that is one big reason why we are thoughtful on expanding across, because you're right, we can obviously accelerate our expansion in terms of square feet area also. We are already in an accelerated mode. I would not say that we are not growing well or we are not expanding well. We are already into acceleration mode, but we want to keep a proper check also in that acceleration. We don't want to go somewhere that we rapidly expand and then after a couple of years we feel no, maybe we'll have to shut down the store because it did not do well. Maybe we should not have opened at this place. Now problem is that it is not about the company, it's also about the franchisee who has put the money, who has put the efforts. I mean, that is where we obviously take very conscious effort on wherever we are expanding. However, having said that, we have a very strong growth trajectory historically also and for future also. I mean, so the dream of the company is to grow, in a proper manner, in a strong growth trajectory, but not haphazardly and rapid manner for sure.
Wow, that's a great ethos to have. I think many of us, when we look about sustainability, we keep thinking about our own company, and we're not necessarily thinking the ecosystem partners. But you're saying that if the ecosystem partners don't do well, then we land ourselves into trouble. That's a nice point, and I do know that since I was insider for some time with Shoppers, I do know that Shoppers Stop has got this whole partnership for progress. Does it really matter if your partners are existent or not existent?
There is no doubt about it. I mean, we always believe, I know you were in Shoppers Stop probably 15, 20 years back. The ethos, the ethics.
That revealed my age, huh?
the ethos, the basic ethics, the principles, the corporate governance, they're all, in fact, probably a few of us knew that I've worked largely in multinational companies and I always felt pride. Multinational companies define what is corporate governance, and when I joined Shoppers, that was the first time I realized, okay, there are Indian companies which are equally good and probably set the tone, set the standard. So it's extremely critical, be it, there has to be a sustainable all-round growth. It can't be, well, I will grow at any cost and my partner should suffer. That can't happen. Even if it happens, the growth will not be sustainable. We are very, very clear on that. And I think that's one of the reasons Shoppers Stop had a, sort of a, not grown exponentially in the last 30 years, but I've been growing well. I've been making profits, decent profits, and doing very well. So that's very, very critical, Kumar, as far as we are concerned. I mean, the entire ecosystem, not only the partners, every stakeholders should grow, and we should maintain the balance, and we should be fair, just and equal to everyone.
Quite amazing. I think not too many companies would talk about it in this form, but I think 3 of them talked about it in the same form. Each one of you touched upon it, telling it's not just me, it's about the ecosystem partners. They also have to grow. But if you have to, for a minute, and any one of you can answer this, I'm just throwing a ringer here. If any one of you have to start up a new company, an e-com company, a D2C company, can you afford to think like this?
I think we can. I mean, I don't want to talk. I mean, I'm sure I can talk on behalf of others. I think we can. All of us would have spent between 15 to 25 years in a setup. And if you're going to throw the ring out and say that, okay, you have to do something completely different, it will be difficult. And because our entire system, our entire thing, everything is being molded accordingly. We can't do something which is not built within us. We will definitely do that's ethical.
No, it's not just ethical. This is slightly more, right? It's almost
what I meant was, yeah.
Yeah, okay. Sorry, yes.
I'll just take this one. See, it's like a closed ecosystem whereby we need to have win-win kind of scenario. You can't have win-lose scenario because if somebody loses, the impact will circle back to you. Say, for example, like you said, if we need to start a e-com company, right? So, yes, pragmatically, we can look at a partner or a vendor from the performance perspective. If it is not performing, yes, there is a valid reason to continue, discontinue. But just because somebody is not making money and I am making money, we can't continue to operate like that. Take an example, moving from retail to wholesale. The best example. Wholesale companies are always cash-rich companies. The reason being the gestation period of money coming back may be a little longer, depending on which industry we are referring to. Say anything from 45 days to 90 days. The money comes in a wholesale company. But please imagine one thing. You have sold the product, and if you want to wash your hands off it, and if the product of, say, 1,000 SKUs, 100 SKUs bomb out, that means the partner who has purchased your product to be sold to end consumer is not able to sell it. Then what happens is, they will not come back and buy your product. So you would be enjoying the luxury for what? 1 season? 1 year? So you have to take care of the partners. You have to take care of your vendors also. So E to E, right from manufacturing to a consumer. I'm saying you have to take care of the consumer also.
Yes.
If the consumer is not happy about your product, and if they have some qualms about it, you have to take care of that. You can't simply wash off. So that also falls under, ethics also. And these are good ethics. The companies which follow good ethics sustain for a longer period. Look at any company. And for me, one company that I really admire is the Tata Group. Very ethical, and they have sustained for a longer period because they always keep the consumer first. So in the entire chain, their partner is also like a consumer for them. So I believe, yes, anytime, every time we decide to do something on our own, we'll follow the same protocols. Does that answer you?
Oh, absolutely. I mean, I did promise all of you who were there in the morning that the modern day CFOs are businessmen first, and then they take up a role of a CFO. If you listen to all their answers, it's not necessarily as people from finance background. They're all people businessmen who've taken up a role of CFOs. I think that's a big difference. I did tell that in the morning. Some of you did not turn up. Was that right? Oh, come on. I mean, round of applause for everybody who's here. The other thing that struck me, that each one of them have gone through, I think, Agni Pariksha during COVID. And they've all come out smelling of roses. They're all companies that I think would sustain for a few more years. So sustainable growth is something that's inbuilt into their ethos and their ecosystem. I also promised you that we'll give time for each one of you to ask questions. If somebody's got questions, you can raise now, because I told the last 10 minutes. Otherwise, I've got a few questions I'll need to ask them. But pehle choice aapka hai. Questions here? And do tell me whom are you asking the questions from. I'll also put up a ringer here again. The person whom you are asking questions may or may not want to answer the question. Yeah, it's their right. So, anybody? I saw a hand initially from here. You wanted to ask questions? You're okay. I have been. Exhausting or exhaustive? Yeah.
So I would like to ask a question to Rahul. So like if your business model is based on franchisee model, what do you do when the franchisee doesn't do well? Like how do you approach that?
Sure. So first of all, we take care all of measures to ensure that the stores are opened at the right place, the right market. It has a proper potential to do well. Only then only we open the store with the franchisee. Otherwise, we don't open. I mean, that is the first thing which we do. Secondly, the entire inventory replenishment is managed by us only, which is fully automated. Now we take care of the entire inventory which is sent to the store. So it is not headache of the franchisee that, whether the inventory which is there at the store is selling well or not. He only needs to concentrate on the store's operation to ensure that a good customer experience is given at the store level. So the entire inventory is being managed by us only. So if a particular product is not selling well at the store, we move it to other stores where it is selling better. So franchisee need not bother at all that, whether what would happen if, because that is one of the biggest pain, any franchisee would feel, that if my merchandise which I'm having at my store doesn't sell well, what will I do with that? So that upfront support we are giving to a franchisee. We take back inventory for which we make a provision for sales return also in our financials on a conservative basis. But that is the kind of support we give to franchisee, that it is needless that, we take care of all help which they require from a replenishment model. We ensure that the store is created very well from a design prospect. We have all SOPs and policies in place to ensure that he only needs to ensure that those SOPs are followed, and a very good customer experience is there. We also have a training model to ensure that proper training is being provided to the franchisee all across, so that they can also grow, their productivity at stores can also go. Now, in any situation, in a worse situation, suppose a store doesn't do well, then also, what we do is that we give them all the support, we take back the inventory, so that he doesn't need to suffer for that. So we do extend all type of support, whatever is required, to ensure that the franchisee also grow along with us.
That was a good question. Thank you so much. Anybody else?
Hello. Okay, my question is for Kiran. You mentioned that cash flow, treasury management being a critical aspect of, to sustain profitability. So, just want to ask you as to how is PMJ, managing the cash flows and the treasury from a tool standpoint, and would you, in your view, will there be like any automation or anything would make that element improve in going forward from in a technology world as we are living in, especially from a cash flow and treasury management point of view?
Yeah. One is the cash flow management. As such, we do in a very conventional way. We have a projection of 6 months. We have reserves kept aside, and there are provision for contingencies and all of those things put into place. All that is there, but to help this cash flow move better and all of those things, we work a lot on technology side or on the innovation side. For example, getting our manufacturing lead time shorter. That actually helps us do that actually helps us better project the things. So like that, there are a lot of provisions that are done on the inventory side or inventory management side, which actually helps plan the cash flows better. So the better is my visibility, the better is the cash flow. So those visibilities are created, and that actually helps manage the cash flows better.
Thank you.
Thank you. Kiran, I did tell you initially that I'm going to come back to one question, which was about smaller retailers. There are a few smaller retailers here. I know that you touched upon the topic telling I grow. Many of the big companies can grow because of the fact that we've got systems, processes. So what is your advice for smaller retailers? What should they need to do? No, I think we need a reiteration because...
No, that's what. One thing was cash flow and another thing was profitability, and then look at the scale. Those were the only 3 things that I would advise them.
So profitability, cash flow, and scale. Okay. Any other additions that any one of you can add to this?
I think what is important, what we have already discussed, is that in which stage a company is. It will all depend upon that. It may be very easy for a very matured company to talk, about profitability or anything, but it is all dependent upon which stage a company is. There can be periods wherein, the focus would be more on scalability to improve customer reach. But the overall point we are trying to make is that the business plan should have enough provision to ensure that cash flow will be there. maybe now, today, and tomorrow, in 2 years, in 3 years. And a proper plan and strategy should be there to earn sufficient profitability in future as well. If not today, I mean, because of any circumstance or any limitation. That is very important. That thought process should be there to ensure that inflow of cash is there, to ensure proper profitability is there within the business structure and within the business plan. That is what is the sustainable model what we are talking about.
Thank you. I think Rajesh
Just
wants
to
to
add to that, I think what is important is what ambition that entrepreneur has. In the sense, if I'm under cruise today, whether I want to go, stay like that, maybe 5-10% growth, but I see a much larger opportunity and I think I can make it bigger. Then, like I was saying, you have to balance between how much you want to retain, how much you want to grow. I think that ratio can change, but profitability and cash flow is given. You can decide saying out of 10 rupees profit, 3 I will keep it for myself, 7 I will invest in growth. Or whether that 3 or 7 is what the ambition and goal that entrepreneur has for himself. But I think the fundamental piece there, in especially smaller companies, there are much smaller resources to throw at, even any new development or technology or whatever it is. So it's important that the first being cash flow and profit, and the next, the larger decision comes on how much you want to grow.
Yeah, I'd like to add to this. From many companies, many small retailers that I have seen, the first part of any problem here is not just about growth. It normally is about how do I want to grow. And I think the commonality between all the companies is that there is some kind of a system and process inherent in the company to really look at growth, stuff like that. Many of the small retailers land up into situations because they have not looked at their businesses from a systemic perspective. They are busy collecting cash, they are busy doing what they can on a day-to-day basis, and they have not really looked at processes, systems, controls, technology in a slightly serious form. And many a times they have also not looked at resources available from within themselves. And many a times the resources for them is not about money. It's about people within the family itself. Sometimes family members are the resources for them. So if they have been able to employ their family members effectively and try and create a healthy respect relationships between each other, their ability to grow suddenly increases. I've seen a lot of very small companies suddenly growing really well because they've been able to enhance that one son in the house who has been able to take up the business along with them, or the one daughter who is willing to support them. And it suddenly grows into a different business altogether. So I think many a times it's about not just about money as a resource, but also looking at people within your own family as a resource. And then, of course, as you keep growing, you'll have to start relying on outsiders to come in and help your businesses grow. Most of the companies only grow because they've also got professionals or outsiders to come in. I'll not necessarily say only professionals. Outsiders, not family members, also coming and joining the business. I think that helps to grow. It's not as if people can't grow. It's about what do they have with them and where can they take it to. So with that, I think we've come to the end of it. Thank you very much. If you found this useful, please, big round of applause for all these people here.